I'm Aaliyah Desatel, founder and CEO of OtterWise, and in this episode, Real Angels Invest, we're asking a question that reshapes everything. What happens when women don't just earn wealth, but deploy it? This session was recorded live at the Big Dipper Innovation Summit, created by JMI, where leaders in business, culture, and technology come together to explore the ideas and industries shaping what's next. Jen Finn, co-founder and CEO of HIO, leads a conversation with three investors who aren't waiting for permission to fund the future. Heidi Nel, Chief Operating Officer at New Theory Ventures, Liz Doerr, co-founder and partner at Sandbox, and Jewel Burks Solomon, managing partner at Collab Capital. They're changing who gets capital, who makes investment decisions, and what criteria actually matter when funding businesses. This isn't just about writing checks. It's about rewriting the rules on access, power, and who's building generational wealth. Whether you're ready to cut your first angel investment or are looking to understand what investors really want, this conversation shows you how capital becomes a tool for change.
Awesome. Thank you so much, Ashley. And thank you so much also just for kind of sponsoring and being involved in this event. It's really lovely, JMI and everyone who's pulled this together. It's great to see such this powerhouse panel of ladies. I'm super excited. And to follow the Richmond Fed CEO and talk about the future of the economy and what's happening right now, I think it's a really good contrast, really to talk about kind of the public markets and what's happening there versus the opportunities for how to invest in private markets. And so really excited to introduce this panel. As Ashley said, I'm Jen Finn. I'm the co-founder and CEO of HIO, which is an artificial intelligence platform for service. But I started my journey in angel investing back in 2008 when I was invited to be part of an angel group where I didn't even know that I could be an angel. I did not think that it was something that was accessible to me. And I have stuck with it over the years, now investing more in myself than in others. But just because I realize the importance to our local economy and for startups, like I can have an impact on the economy by helping others achieve their dreams. And so that's been my mission of why I stayed with it. But as we go through and introduce our panel, what I'd love to have them do is introduce yourself and kind of the how you got into investing and venture capital and what keeps you going. So I will start with you, Heidi.
Amazing, thank you. Hi, my name is Heidi Nel. I am the Chief Operating Officer of New Theory Ventures, which is a venture catalyst and venture-style evergreen fund that sits within a larger family office that I also run. I'm personally passionate about redefining wealth with women at the helm. History's kind of taught us that certain genders are wealth creators, and others of us are not. And, women right now have never been richer, have never had more power, despite what we see in some of the headlines. And capital and being able to move capital is part and parcel of that. So that animation to get more women agency, more women power is kind of what led my journey to investing.
Been good. All right. Yes, I'll just go down the line this time. Yep.
Hi, everyone. My name is Liz Doerr. I came into this world working for a small seed fund here in Richmond. We had about $50 million in angel investments under our portfolio, and then we raised a $33 million fund. I came into sort of being very interested in activating more female investors because when we were raising the fund, I looked at our list of targets and 99% of them were white men, nothing wrong with white men, but I said, what if I just do a small gathering to talk to women in our community about venture investing and how we might want to think about it in terms of giving back to the community, generating personal wealth, et cetera. My goal was to have 25 women show up and 80 women attended. And then I threw that event several other times and it was the same thing, doubling the attendance. And so what that told me is that there is a real group of women that are really interested in learning more and oftentimes are not always invited into the room where it happens. And so I became very personally passionate about evangelizing private investing, private wealth management, et cetera. Today, I am a service provider, so I work with startups providing fractional CFO support, but my firm invests a portion of our profits in either one of our clients or a community startup every year. So happy to talk about how we arrived at that later on.
Awesome. Hi, everyone. My name is Jewel Burks Solomon. I am managing partner at Collab Capital, which is an early stage venture fund based in Atlanta, Georgia, investing across the U.S. And I come into investing from the path of being an entrepreneur first. So built a business. I was here last year, so some of you may have heard my story, but built a business, ended up selling it in 2016 to Amazon. And the hardest part of my journey was raising capital. So while I was still an entrepreneur, I decided that the next thing I wanted to do was become an investor and really become the investor that I wish I had, because I didn't have the best experience with investors. And so I started angel investing shortly after selling my company and completely fell in love with getting in early with businesses, and particularly the businesses that I invested in were mostly female founded, and decided that I wanted to do that work for the rest of my life. So I raised a fund starting in 2019, closed it in 2021, since have invested in 43 companies across the US, 50% of which are founded by women. And we're now investing out of our second fund. So yeah, we'll continue to do this work for as long as I can, and super excited to chat more about it.
Awesome. Well, before we get started, just a really quick, wanted to get a pulse from who's in the audience. How many people here are business owners? Raise your hand, raise a hand, okay? All right, how many are tech company founders? How many people have a tech-focused platform? Okay, you? All right, and then how many are investors or have invested in private markets? Okay, a few. All right, great. So I think there is probably some basics around when we talk about angel investing and private capital and venture capital specifically. So I would love, just because I know Liz has kind of given us, I've loved how you've done this over the years. Can you just give some really basic definitions of what it is between angel and venture capital?
Okay, I'll try. Okay, so there's the world of equities, right? Those are stocks. Stock and equity can be used interchangeably. We have the public markets and the private markets. About 50% of the revenue that is generated by businesses in the United States comes from the private markets. Public markets, you can invest in Amazon or Apple or whatever. You can buy a portion of a share, and sell it the next day. In the private world, you have to invest either individually by knowing the company or by becoming a partner in a fund. And so when we think about sort of the life cycle of a company, if they're raising venture capital dollars, it starts really at friends and family, which I hate that term because that assumes that you have wealthy friends and family, but in the absence of anything better, you kind of bootstrap your company, you raise from individual high net worth individuals to fuel your business to the next stage. At the next level is what is typically called angel investing. And that's where you might tap into people that are well-known angel investors in your community or are members of an angel organization. So 757 Angels is an angel group out of Hampton Roads as one small example, but it's a network of folks that have signed up to say, hey, I'd like to see investment opportunities. And so entrepreneurs will come pitch before that angel group, and then the angels will make an individual decision as to whether they would like to invest. Then once you start getting sort of higher up, you start getting a little bit more traction, you start to get into more institutional, access to institutional capital, which is typically funds, pre-seed, seed, or venture funds, which are all either networks of individuals or companies that invest in a fund, similar to like you investing in a mutual fund. Your money is pooled to diversify your risk, and then there's a fund manager that makes decisions on behalf of the underlying limited partners of that fund. So it goes from pre-seed and seed, and Heidi and Tiffany can share a little bit more about sort of how the differences between the definitions happen across stages. But then you get into venture. So pre-seed and seed is when you're starting to generate revenue, you're starting to generate traction, you're starting to raise north of $500,000 to $1 million, and then you get into venture capital. And so venture capital, there's a series A, B, C, D, E, F, G, H, I, J, if you go that far. And then you can get access to, sort of the letters coincide with revenue growth or profitability and your check size. Then you might transition from venture capital to private equity. and so on and so forth. And then eventually you might have an initial public offering where your company changes from being private to public.
So always love that, just full view. Particularly, I think the way you just described that was a lot as a founder. So Jewel, I'd love from your perspective, like going from being the founder and being the person who is investing, right? What have you seen? What are some of the barriers to entry for folks in this room that might want to become investors or just in general? What do you see? Like, why don't more people do it?
Well, actually, I think it's more fun to be a founder. That's one thing. Being an investor, you lose control a little bit because you're not the one who is actually making the decisions in the business. You are relinquishing that decision-making power to the founders. So that's one, if I had any qualms with being an investor now, that's probably one, is that I don't have as much control over the outcomes. So if you love control, you probably should stay as a founder versus becoming an investor. But the reason I would recommend to become an investor is that, one, you get to diversify your risk. So I get to invest in, I invest in probably 6 to 7 companies a year and building a portfolio. In the first fund, 38 companies, and the second fund, 30 positions we'll take. So I get to see a lot more opportunities, and I get to bet on a lot more people with the hopes that those folks will return capital back into the fund. But the likelihood is that vast majority of those companies will not be successful. That's okay, because a few of them will be successful and they'll make up for the rest. So that kind of diversification is attractive. And I think also being able to share, for me, the rewarding part is being able to share what I've learned. So I was a business owner. I loved it. I learned a lot. I hit my head a lot. So getting to share what I learned with entrepreneurs and really going after different problems every day. So for an example, we had an entrepreneur come down from New York in our portfolio to spend the day with us yesterday in the office. We did a war room session thinking about the strategy for this entrepreneur for the next 5 years, working on their financial model, their pricing strategy, their hiring model, and being able to go deep in that company for 24 hours. And then, tomorrow I'm going to be looking at a totally different company. That variety is that part is fun. And it's helpful for me as I grow as a professional. I'm seeing so many different problem sets, so many different ideas, and get to go deep and then kind of come out and look at the big picture. So all of that, I think, is some of the cool aspects of being an investor. And obviously, the hope is that it all pays off in the end, and I'm able to generate tons of returns for my investors and for myself. And then I'll say just one piece about an angel investor. Being an angel investor, as I mentioned, that was kind of my entry point into becoming a fund manager. First was angel investing. And in that role, wearing that hat, it was great because I was able to build a thesis. So I had this idea that there were tons of entrepreneurs who were similar to me, building incredible technology, but not getting the right access to capital. And that was my thought because I had that experience as an entrepreneur, but angel investing helped me to prove that as a thesis that allowed me to go on and raise now over $120 million in a fund. So making these smaller bets, building a case around this idea is what allowed me to go on and raise a larger fund. So if you're thinking about getting into investing, I think angel investing is a great sort of entree into becoming a fund manager to really build out an idea or a thesis that you want to put more capital behind.
And Heidi, do you have any other kind of barriers, or maybe like what is it not? Like what's the misunderstanding about angel investing and venture capital?
Yeah, I think there are a lot of barriers for women specifically. There's also a huge confidence gap. There was a great study in 2021 that reported on women's participation in the stock market, so on the public side, but also in investing in general and just kind of broadly financial literacy. And it's not surprising to any of us up here, probably to any woman in the audience. The survey sample group was split into two sections, right? And there were equal parts men and women in one, and in the other. In the first one, the answer selections included the answer, I don't know. So they went through, a series of however many questions. Far and away, women selected, I don't know, more than their male counterparts. Then in the second sample group, they eliminated, I don't know, as an answer. And far and away, women selected the accurate answer. So there's sort of like the confidence gap, which is its own vicious cycle. I would say the barrier to entry is pretty high, which is what makes angel investing in angel groups pretty appealing. A lot of funds, like your minimum check size is going to be $100,000. And even if you're somebody in the US who's a high income earner, you're competing with a bunch of different places on where to put that $100,000 into a house, into your kid's education, into a number of different things, caring for a child, caring for a parent. We're in the sandwich generation. So the barrier to entry. And then I would say the other thing is, and it kind of scratches the surface back on the confidence gap, is people feeling like they don't know. How do I pick a winning horse, right? Like, how do I pick the winner? And I would say one tip, and I see this happen for folks a lot, people will say to me like, oh, well, I tried that once and it didn't work. Well, no kidding. Statistically, it's not going to work, because this is, if you look at the entire sort of private market asset class investing spectrum, early stage, especially in this startup phase when you're in friends and family and there's still sort of not revenue to prove out your model, it's like the riskiest time to invest. And so what I always tell people is sort of, there's power in numbers, right? So if you have $100,000 to deploy, don't write $100,000 check, write $10,000 checks. If you have $25,000 to deploy, don't write one $25,000 check, write five $5,000 checks. And then sort of ask questions. Like, there's no dumb question, and surround yourself with other people who are kind of actively and eagerly learning. And what I found in the communities that I'm a part of, and this is especially true in sort of family office communities, because in most family offices, the teams are really nimble. So you have like a small amount of people, doing investment and lifestyle work every day, that the people I'm in community with are always really open to sharing their diligence. So if you're interested in a company, there is an opportunity. Don't be shy to ask, a colleague or a friend, like, hey, how did you diligence that? Can I see your notes, et cetera? And then I would just add one more thing, and this is more to real estate investing versus angel, but still on that private market spectrum. There was a point in my own investment journey where I think consciously I switched a little bit from consumer to investor, right? So like, I used to define success as having a designer purse. And then there was a point where I was like, wait a minute, I don't need a purse. I want a building. Like, I didn't know anything about commercial real estate. And so I just asked 5 people who I knew were commercial real estate investors, and they were like surprisingly super gracious. One of them sat me down and was like, here's how the capital stack works. Here's the riskiest part of the capital stack. Here's the least risky. Nobody can get into the least risky because that's the bank. The bank has the least risky, but you can come in here, here, or here, and this is your risk exposure. So I think just like never being shy to ask people to share their knowledge.
Yeah, I think that getting started, right, is where a lot of people just get paralyzed, right? Because it is this uncertainty, and if you've never done it, you're just insecure, right? And I think about my own journey of becoming an angel investor. I was like, wait, I can do this? But what was great as being that angel was I was part of a group, right? But I realized that even though I was learning a ton with them, I was a very impulsive investor, right? It is early stage. I'm one of those angels like, oh my God, I love you. I want to help you. And I realized after a lot of investments, I was like, no, actually, it would be much better. Even now I know how to do it. I would be much better with a fund, right? Even though I'm not as in control of who I get to pick, which can be very, very frustrating, but to put some of that money into a fund and let people that are going to get the deals, I don't have to be out there hunting all the time. And so what I love about the three of you, right, is just kind of taking that next step and taking a bigger leadership role in being the voice at the table and creating new tables. So I would love to have each of you kind of go through with your respective worlds, just what is your investment theme, right? And so for your group and for what your focus is on, kind of how do you focus when you're evaluating startups that might be different from what might be considered a traditional VC approach? So I'll start, Heidi, with you just in terms of the family office, kind of like what is your role in that family office and how are you shaping that? But
so
and personally too.
And personally. Well, I'm motivated by shifting capital to communities who historically have lacked access to capital. And I also am a woman, so I have a firsthand experience of what that discrepancy and sexism feels like. So my mission is to focus on moving capital to female founders and also to educate and create access points to female investors to transform how they think of themselves and know themselves as wealth creators and generational wealth creators. And then at New Theory, and the reason I have built so much of my career there is because my principal and founder is an exited founder herself. She started her first company at 23 years old with less than $6,000, scaled it over the course of a decade, sold it to a strategic for an undisclosed amount of money in the hundreds of millions of dollars, and experienced firsthand what that's like going through that journey of all the venture capital that's deployed. Only 2% goes to female founders. And in fact, last year it went down to 1%. And there are all sorts of different data sets out there that show that female founders outperform male counterparts by 1.8 times, by 2 times. If you look at the full asset allocation spectrum, by 40 basis points, it goes on and on and on. So my kind of thematic approach to investing is in female founders, in the early stage side, in the commercial real estate end of the spectrum. That's a little harder.
Yeah, I'm going to jump over to Jewel. What about you?
Yeah, so in terms of themes at Collab, we're investing across the things that we think are going to make the biggest impact in terms of shared prosperity. So that is access to quality healthcare and closing gaps in healthcare, access to community infrastructure, so things like transportation, clean water and healthy foods, digital broadband, things that we should all have access to, but unfortunately in many communities we don't. And then the last is economic mobility. So thinking about future work in a new way, how do we use technology to close gaps in terms of access to finances and allow people to earn more and retain what they earn? So we're investing across all of those areas, kind of a lot of themes, and we think those are the most important areas in our society that need the most attention. And so we want to be investing in the folks that are building technology in those areas. And we particularly are looking for people who have proximity to those particular problems. So even in their lived experience or have some special insight in those areas and can solve these problems. And in terms of the types of founders that I'm looking for this same founder that I was talking about earlier that we spent a whole day with yesterday, someone asked me, because we did a little investor dinner for him last night to try to raise a bit more capital on top of what we have invested. And someone asked me, why did we invest and why have we doubled down with this founder? And my answer was because I love to invest in founders who are on a mission. So it goes beyond just a person who wants to build a business because they want to make a lot of money, but into someone who is really on a journey. It's their life's work to solve this particular problem. So that's what I'm kind of listening for when I'm speaking to founders. And the founders that I think are doing the best in our portfolio and that I'm most excited to work with are those who I know, because whatever they're working on is their life's work. They're not going to be rattled by all the changes in the macroeconomic environment or tariffs or all the things we heard about in the report from the presentation earlier. So that's kind of what we're looking for, and those are the themes that we're investing under.
Okay, awesome. And Liz, so now in Sandbox, and I love that you guys are kind of taking some of your monies and putting it into the service. Kind of what I think there's other business owners probably haven't even thought about, wow, what's that opportunity for us as a team to be thinking about that? So tell us a little bit more about what you've been doing with Sandbox.
I think there's an opportunity to think about where you put your money, either as a business owner or as an individual. And I've sort of evolved my thinking around, of course, investing in nonprofit and charity is important. But I also think that there's a way to give back to the community by also seeking financial return for that investment and solving a very clear problem, as the women on the stage have talked about. And so as I think about kind of where my firm puts our money, I think that there's a real opportunity not just to give back to our community through donations, but also to give back to our community through investing in early stage founders, because at least regionally, there's a huge funding gap in the really early stage side of things. There are not very many check writers. And as you entrepreneurs know, it's very hard to find, your first $100,000, your first $200,000. And so that's where we're excited to be investing a small portion of our firm's profits. What we have done is set up an investment vehicle, LLC. Me and my business partner own that vehicle. And so it's kind of like phantom equity for our employees, because you have to be an accredited investor. So you have to have a certain wealth threshold to be able to make a private investment. But what we essentially said is, so long as you are an employee at my firm at the time of investment, you have an equal pro rata share of our investment dollars every year. So and it's a great opportunity for us to also, we actually just finished our diligence today. So we made a decision on who we're investing in this year. We're proud to be investing in a Lighthouse Labs company. But it's a great opportunity as well to teach my employees about the due diligence process. They're not at a point right now where they could financially make an investment, but hopefully that kind of seeds the groundwork for when they do come into their sort of wealthier earning years to learn a little bit more about investing. So I think it's a great educational tool. It's a great way to give back, and it's a great way to, hopefully generate, maybe some financial returns for our employees down the line.
Well, let's talk about that impact then. Let's talk specifics, right? Like, can you share, if possible, one of your investments that you're most excited by, that, Liz, I love you say, like, I have a crush on? Is there a company that you have a crush on? Or even, is there a company that you feel like you've invested in or folks have invested in, had it not been for having a female investor, it might not have been made? So that's a lot in one big question, but that's where I'm like, I want each of you to answer it slightly differently. Okay. Think about it.
Well,
start with your crush, Liz. Do you have a crush?
Sure. There are some people that were in the room on a panel last week, so I'm trying to think about something that's slightly different. But I would say that certainly I'm interested in investing where there's in entrepreneurs who might not otherwise have access to capital, and so. Whether that be because it's a unique idea that's hard for folks to understand, or whether that be because they're an underrepresented founder, or whether that be that because they're earlier stage, or there's a myriad of different reasons why it might be hard to access capital. I think that's what energizes me. On a personal level, the reason why we just made a decision, which I'm not ready to disclose yet, but is because we thought that the founding team just had a ton of grit, and that's something that as a service provider and as an investor, I've seen. We've been through COVID, we've been through what we're going through right now, and I think that having that grit, that resilience, you all know, as many entrepreneurs in the audience, how hard it is out there, and sometimes it just takes someone that is willing to think differently, pivot quickly, test new things, move, fail forward, and keep going is, I think, probably the most important thing. So I would say that, the sort of classic trope of investing on the horse of the jockey, like, I definitely think that the entrepreneur at the helm really, really, really matters because there's so much uncertainty. And so if you have a lot of conviction and the ability to kind of persevere through this, Kristen in the audience, I would say, is a very gritty and amazing entrepreneur, as one example that I definitely have a crush on. So, yeah.
All right. You guys have had other time to think. Jewel.
Yes. So
favorite?
It's hard to pick favorites, but one thing I will pick one for this illustrative purpose. But one thing I wanted to share is on the topic of investing in women founders specifically. We do a stack ranking of our portfolio every quarter. And this last quarter, the top 8 companies in the portfolio, 6 of them were female-led businesses. So that's something I was really excited about. So yeah. And just to give a little bit more color of what goes into that, we're looking at revenue growth. We're looking at pacing toward profitability. We're looking at how big the market opportunity is, new releases, if they have a new product that they've launched, how successfully did that go? How close are they on whatever their forecast was? Those are some of the factors that we're looking at to rank the companies. So I'm really excited that the women founders in the portfolio are kicking butt. But one company I'll talk about is Culina Health. It's a business that everyone should know about because they are making nutritionists and dietitians universally accessible. So if you are interested in getting a nutritionist or dietitian and maybe thought it was not accessible to you because of price or availability, you can easily get access to one through Culina Health. And the thing I love most about it is there are actually a lot of companies now in the space. She was pretty early, but there have been a lot of new entrants to come into this space. But when we look at outcomes from a clinical perspective, she is far and above, really focused on quality and making sure that the outcomes are there for the consumers. So that's one company that is doing amazingly well. We were able to invest in the seed round and then double down in the Series A round and really take another bet when some investors were hesitant to do so, even though the performance was absolutely there, revenue growth was there, everything was there. But unfortunately, even when you check all the boxes and do everything right, sometimes as a female founder, you're still not given the right level of capital access. So I felt great that we were able to successfully get her Series A round done last year, and now she's off to the races, doing amazing.
That's really awesome. All right, Heidi. Got a specific?
I do. I have a favorite, Female Invest. It is an online financial education platform started by these 3 young women in Denmark. Similar experience to you, actually. They started they realized one of them in particular, when she was 19, she came from just a working family, worked so hard to save her money. And then sort of it dawned on her oh, my money, I'm actually losing money by leaving this in my savings account because this low yield savings account interest isn't keeping up with inflation. And I've worked way too hard to have accumulated this money and then be losing it in the savings account. So her and her friends got together to drink wine and learn about investing. And then they opened it up to other people. Then it was 25 people. Then it was 100 people. And they were touring around the Nordics to these sold out auditoriums. So they became a nonprofit. And then more people wanted it. So they actually decided to switch over and have it be a business and figure out how to sort of produce the same kind of content at scale. They entered the UK market and officially kicked off in the US a few weeks ago, although they had already achieved market penetration here in the US. They were the first company that I diligenced when I started at New Theory Ventures. I was there for their first priced round. And it was the first time that, for myself, I got a real kind of framework around the criteria I look for as an investor or somebody who's sort of informally a part of an investment committee at the family office. If I'm going to go to bat for an investment with my family member, this is what I need to see. And when I say my family member, I don't mean my family. I mean my principal. I actually don't have wealth. And so it's even more exciting.
Still ahead, the question these investors actually ask before funding a business, and why betting on women isn't just moral, it's mathematical.
Well, I think both you and Jewel have brought up a little bit of a topic that I always find fascinating, right? So one, it's kind of two-sided, different for each of you. One was there's this group of women who are founders and have this amazing idea and decided it should be a nonprofit instead of a business, right? And then on the other side, you have a great business that's actually making money and outperforming peers, but it can't get the funding. So there's this, a lot of time, people describe investing in underrepresented founders as being impact investing. So I would love to hear, I know what happens inside my heart and brain when that happens, but I'd love to have you guys kind of react to that. Jewel, do you want to start? Because you had a great response yesterday when I asked you this.
Yes, I have a lot of responses that come up when I think about that. But for us, we try to really understand what people mean when they say impact investing, because the definition can mean different things to different people. And unfortunately, it has a connotation that when you say impact investing, you're also saying that the returns will be concessionary. And we like to be very specific by saying that we expect top tier returns and we expect to have an outsized impact. But depending on who we speak to, we have to really be careful with the language, because another unfortunate thing is when I started Collab, I never said anything about impact, but people just assumed because of who I am and who I want to invest in that I was talking about an impact fund. This second fund, we decided to lean into that because people were going to assume it anyway. We might as well play it up and really define it, what we mean about impact for ourselves. So I actually made it the second slide in our deck, in our fundraising deck, and the title was intentional investing. And we defined, what do we mean by that? We're talking about who we're investing in, what those people are doing, the solutions that they're building, the teams that they're building around those solutions. So we care about making sure that everyone has equity on the team so that when there is an amazing event in the future, it's not just the money from that isn't just held with investors and founders, but it goes to the employees as well. And then we believe that all of those things together, the who, the what, and the team, will create a flywheel for the impact that we want to see. So in our world, we are really specific that, again, we're not just talking about impact for the sake of impact or feel good, but we're talking about delivering outsized returns and delivering community impact as well.
Okay, awesome. Anything else to add?
Yeah, I mean, I'm so aligned. I think when I talk about investing in female founders, people think it's an impact investment. It's not. It's a smart investment, right? Like, again, there's data out there that points to female founders outperforming their counterparts 2x, and there's less public data that sort of friends who allocate, their smallest check size is $100 million. So they're looking for like high performance general partners of large funds. And they've intentionally sort of kept the gender and the race of their GPs. I mean, you could look it up so you can figure it out yourself, but they don't sort of lead with that data. And they even show a 10% higher return over the last 10 years from GPs who are women or are people of color. So there's like plenty of data to support. I'm interested in putting W's on the board. So that's like my theory of change. The one thing I will say is, you mentioned philanthropy as well.
Enlisted too, yep.
In philanthropy, only 2% of all philanthropic dollars also go to women-led organizations. So for me, kind of my mission is to move capital to communities that have historically lacked it. Part of that is because I believe, whether it's philanthropy or the private market, that like women are smart AF. Am I allowed to say that?
Yes. You are.
That's just a smart.
In this panel, you're allowed to say anything, unlike a lot of panels.
And I love men too. I'm married to one, so it's not a knock on men. It just I'm interested in fixing the disparity.
Yeah, well, and I think that on our list of questions here, there's one that goes along this. Post the Fearless Fund case, which legal or deal tactics best shield DEI investors backing diverse founders? And can Fearless's response serve as a template? Does anybody? Jewel, you want to talk about that one? And maybe explain to the group what the Fearless Fund case was?
Yes. Okay, so just backstory. Fearless Fund is a venture fund and nonprofit. So they have two arms based in Atlanta. So I actually know the team very well. And they were sued last year, or maybe 2 years ago, by the same group that sued Harvard, the same group that's suing everyone at this point, for DEI-related reasons. They were sued specifically around a grant program that they were doing in partnership with MasterCard, where they were offering $20,000 grants to Black women-owned businesses. They ended up settling that case, they ended up settling the case. So I don't know what the question in that question about using that as a template. I don't think that the outcome was great, so I wouldn't necessarily use that as a template. I think what it has informed, at least I'll speak for myself, is extreme vigilance around what's happening at all times. So I'm always tracking the different lawsuits that are happening and the resulting impact for corporations. We have a number of corporate LPs in our fund. So I'm in constant communication with them around what they're seeing, what they're nervous about. A lot of our philanthropic LPs as well. A lot of nonprofits are getting threatened around losing their 501c3 status if they have DEI-related activities or any race-based or gender-based programs or grants. So there's a lot of things that are kind of up in the air as a result of some of these lawsuits, and then further exacerbated by the executive orders around DEI. There's so much to say about that, but I'm trying to keep it brief.
But I do think the important part is what you called out, because Fearless Fund has a 501c3 and an LLC structure. And I remember when it first started happening, I got a little nervous about our thematic investing. And the only reason it even got played out in the court of law is because the suit was against the public interest side, the 501c3, not the private LLC side. So on the private side, do what you want. Right.
I think I think more so because of the executive orders now, there's impacts. Like if you're on the private side, the way that I'm seeing it, and the reason, for example, you haven't heard me say that we invest in Black founders. We do invest in Black founders, but the way that I talk about our work has had to change because I don't want to spend my time in the courtroom. So if you go on Collab's website, you will notice that we talk about proximity versus talking about racially who we back. When you look at the pictures of our founding teams, you will see that we have a very diverse set of founders that we back. But I think because I'm managing capital on behalf of other people and other entities that are concerned about a lot of these issues, I had to make adjustments, which there were a few tears that dropped because of it, because I really didn't want to have to do that, but also understanding my number one job is to protect the capital that I've been entrusted with. I did have to make those adjustments. And I'm seeing a lot of even private companies, other funds, firms, the like, make adjustments to stay in business, to continue to do the work that we know is so important to do.
One of the things that my team, this is a little bit unrelated to investment, but it has, obviously everyone's thinking about like what's on my website. It's totally effed up. And, but our culture consultant reminded us that a lot of the DEI work, at least that we're trying to do organizationally, is internal, really understanding and deprogramming and really trying to build a culture internally that is reflective of our diverse world so that our diverse minds are going out into the community and projecting the same. And so if you're not doing the internal work, the external work won't come. And so when we're thinking about sort of external DEI messages or promotions, et cetera, if you're not doing the work internally, it doesn't really matter. And so I don't know, that sort of helps me sleep at night because I know that my team is very focused on making sure that we are building a diverse culture that is open to diverse mindsets and that we are building pathways for people of all races, of all gender orientations, of all sexual orientations to move up within the organization and to give back to our community. So I don't know, that's I guess my small takeaway about how to handle what's going on nationally right now. Heidi, anything to add? Because I think do you have anything else you want to add before I segue? No, we can go back to this if we want. But I think what this is bringing up is and even with the last conversation with Tom Barkin, he was mentioning as the Richmond Fed, right? There's just, as the CEO of the Fed, it's like there's fog out there, right? And so when you're in fog, you can either keep going, you can slow down, but you can get hit either from behind or in front of you. And he said the best thing is to pull over. So that's what a lot of people are doing in the public markets and probably in government. So I'm curious with what is happening, the uncertainty, what are you seeing in the private markets? Is it the same? And so what are you seeing with the fund? So we talked about the adjustments to other pressures, but just this overall sense of uncertainty. What's happening this is probably both for people that are interested in joining a fund. And if you can't put your money in a public market, if you have the opportunity to do it in private, but also for people who are looking to raise, right? So what are your thoughts on what's happening and kind of what's happening in the private markets? I'll start with you, Heidi.
I mean, I'll just say my vantage point is a little bit different because of where I sit in a family office. And so I'm responsible for the whole corpus, all of the asset classes. And venture is the one I'm most passionate about. I work for an exited entrepreneur, so she's most passionate about. For us, we're diversified, right? Like 101. And so when the market tumbles, we've sort of hedged some of our stuff. But, definitely makes us think about, should we deploy the capital in an early stage company right now? Or should we sort of make different strategic decisions? Because at the end of the day, and this is distinct from a venture capital fund structure where you have a finite time cycle where you have to deploy that capital by, and you can only get up to a 2-year extension if you don't do it by that time. For us in the family office, I need to preserve capital and I need to grow capital. And we have sort of a target that across asset classes we aim to grow by every year, and then we decide what to deploy based on that. What I do see from a lot of founders is it's just harder right now because people don't know what's happening in the economy, and that's kind of a natural knee-jerk reaction.
Yeah, it is harder right now, and I can speak to that for the founders in our portfolio. Like I said, we have founders that are hitting all the metrics and having a much harder time raising than we would expect. And then it's harder as a fund manager to raise capital. I just completed a fundraise and it was really hard. But I do think that for those of you who are angel investors or interested in angel investors, if you have the appetite to remain active, this is probably going to be the best vintage that you could be a part of in terms of making bets now, because as investors, when everyone else is scared, that's the best time to make your bet. So I get really excited because I think in terms of quality of the companies that we're seeing, all-time high. You have to think of the mindset of founders who are deciding to start now with everything that's going on. That's a different type of founders than the ones that were starting in 2020 or 2021 when money was flowing freely. So I think that if you have the appetite, the risk appetite, and you have some capital to deploy, and you see great opportunities, now is the time to kind of step into that gap that does exist where more of the institutions are holding back. But I think this is a great time to make bets.
And I shared this to some folks last week, but as a service provider, it's rare that folks are coming to me. Usually I'm going to folks to build connections. And over the last couple of weeks, I've been cold approached by 5 separate funds looking to make investments in Virginia-based companies. And I think it speaks to sort of the if you have the capital, their fundraising activity did pick up for funds in 2023 and 2024. So there is dry powder sitting out there. To Heidi's point, they have to deploy it quickly. And if they don't, it creates a drag on your fund returns. And so I was actually pretty optimistic. I'm feeling pretty optimistic about for the right entrepreneur, there is capital that is waiting. And I think that there are a lot of opportunistic funds that are looking to invest regionally. The Southeast, I think, is a burgeoning area. And so I'm somewhat optimistic, at least by that news.
Yeah, from my own experience now being a founder, I've definitely started to sense something very different, right? And I have probably 5 emails a week from funds that are reaching out just to, I'm probably still too early for them, but like, oh, but we want to develop relationship now. And so it's just really interesting just to have them cold calling me, which has been a very interesting turn of events, to say the least. But we have about 7 minutes left. There's some great questions here from founders. Oh my God, I must close that. But it really, a lot of it just goes down into, there's one very specific I'm going to ask. Do any of you invest internationally? No. Okay.
I mean, we did have the Denmark.
Right,
cited,
yes.
but it's a Delaware LLC.
Okay. And so I think the person who asked the question about having women-founded companies in Africa, I'm sure at the event afterwards, there will be folks that can answer that question and talk about that conversation who have tons of perspective on that.
At Havana 59.
At Havana 59, just to reinforce, I do realize I'm facilitating something that ends like right before the happy hour. So I think the other one really, and we can close out on just the question around if you're about to start to raise, I'm sorry, now there's all of a sudden a new question that popped up. Let's talk about advice for founders. There's somebody who was asking about like red flags or green flags or whether or not to bet, and just best piece of advice for founders as they prepare for investment conversations. Just general advice for founders as we close.
I think know your numbers and make sure that your numbers are consistent with your data room and your deck and what you're saying externally. I think oftentimes, and don't make it so complicated that it's so hard to remember your numbers. So pick your 4 or 5 metrics, really understand the key drivers of your business, be able to explain that and articulate that to someone without looking at Excel. Have the Excel to back it up, but know your numbers. And then I would say just never underestimate the power of just having a coffee meeting with anyone and go to that meeting without any agenda, but just build your network, because the more people that you know, the more people are going to be willing to help you, and the more people you help, the more the energy is going to come back to you.
I don't think know your numbers can be stated enough. And the reason I say that is because oftentimes founders are visionary dreamers, maybe experts in one specific area, and perhaps finance is not that area that they're experts in. And I've found that a lot of times people delegate or get the financial person they know to build a model, and they think that checks that box of knowing their numbers. But in actuality, numbers are the business. So you have to not just know them, but actually use them for everything in terms of decision making and become intimately familiar with all of it. So I just want to underscore that point, because I think it's not the most fun part for people. But if you decide that you're going to get really close to the numbers and not just have someone else do it and then look at the spreadsheet and remember the cells on the spreadsheet, but actually think about what you need to get to the next milestone or the plan that you want to have to get to that eventual exit, and build the model in partnership maybe with someone who understands Excel more than you do. I just really want to drive home this point, because I think a lot of people, it takes them years to get that part. And I think it should come at the very beginning. And I think a lot of people don't get the feedback when you are meeting with an investor and they're asking you certain questions about your numbers and you give an answer. They're taking a mental note, because for me, when I'm evaluating founders, I have to believe that at some point in time, this person can be a public company CEO. I have to at least think that there's potential there, that they're coachable, that they're hungry, curious to learn the things that they don't know, or at least have the skills to build the team around them. But when someone feels very disconnected from the numbers, that automatically tells me that they don't have what it takes to be a public company CEO. So I just want to really hammer that one home, because I feel like we don't talk about it nearly enough when it comes to startups and innovation, because we're really excited by ideas and go-to-market marketing, other things that are a bit more fun, but actually the numbers is what's going to drive everything. So just making sure that you really understand that.
Yeah,
I've been evangelizing this for years.
Yeah.
I also think it's a gender thing to, I've never heard a man say I'm bad at math, and I hear women say it literally all the time. Right. And so we have some, but can we just stop? Can we agree as women to just stop saying that? It just doesn't, I don't understand why we feel like we have to say that. You're not bad at math, so just get over it. And numbers are fun. I think they're fun. They can be really fun. So anyways.
Also, if you only have 30 minutes with someone, I say it at the top of all of my calls. Great, I read the deck, I like your story, I like your thing. I want to know about the numbers. People get 25 minutes in and we still haven't done it. And then it's like, well, I'm a no.
Well, and that's the whole point, right? As an investor, you want to know how they're making money. And if they don't have the paying customers, that's where these early stages is so hard, because I find, and I'm in my own angel investing, people are so worried about raising money, they're not focused on making money.
Yes.
And I think that I would put in, that would be my advice to any founders, focus on a paying customer. Will somebody actually pay you for what you've done?
Somebody said this recently, your best source of capital is sales. It's the only free capital you will ever get.
So and wouldn't it be great? And I'm always on this, do I really want VC? I'd much rather just have paying customers and bootstrap it from there. So anyway, back to advice for you.
I look for, you were giving the great example of friends and family, seed, pre-seed. We do seed, we do seed Series A. That's where we play. But we don't touch any pre-revenue companies. And one of the things I look for early on is no matter how low the sales are they increasing them by at least 10%, if not 15, 20 month over month? And for me, that's one of the first indicators of, okay, we want to take a look at.
Because venture is about high growth. It is about trying to achieve a 10x return. It is not your local loan. It is not your local shops, right? I think that's the really key thing. A lot of people just kind of get caught up in a bit sometimes. So, all right. With that, we are exactly on time. I would like to thank the panelists for giving their perspective, but thanks everybody for your time.
Here's what's actually happening. Women aren't waiting for permission to invest. They're stepping into angel investing and venture capital on their own terms. This panel made it clear that when women control capital, the opportunities expand. Different businesses get funded, different founders get backed, different communities build wealth. And the track record proves it. Women investors back broader founder pools. The companies they fund often outperform, and their investment strategies consistently deliver results. Whether you're already investing or you've been thinking about writing your first check, the message is clear. You don't need to wait until you're ready or until someone invites you in. The future of investing is being shaped by people who saw an opportunity and decided to act. Capital is power. If you have it, use it strategically. If you're building it, start thinking like an investor now. Be sure to check out other episodes from the Big Dipper Innovation Summit for more insights into the leaders shaping what's next.